I think our view is that that was peak pessimism on April 9th, and we're seeing the rally continue. As I say, you mentioned it. We've gone a very long way in a very short space of time, right? So you can't extrapolate that pace of gain. So some period of consolidation may well take place. Some negative news. I don't think this Moody's report is probably that. I think it's not that big a deal, to be honest. I mean, it's still the reserve currency of the world and will be forever, or at least for a very long time.
Come on. You don't think the bond vigilantes basically are tasting, smelling blood in the water right now? No?
I think they're concerned, right? So I think that, and obviously we've all been talking about, does the US experience a trust moment this year? I think actually this reduces the risk. If you're thinking about it from a rating agency perspective, they have two choices, right? They can do it before the tax bill it comes through, or they can do it afterwards, and they can't influence anything afterwards. So I think what they've basically said is, look, if we do it now, it's not seen as political. The incoming administration or new administration can blame historical administrations. If it happens straight after the tax bill is passed, then the blame would squarely be on the current administration. So I think there's probably a bit of political element to this, but I don't think it probably makes that big a difference
Which
in
is
the big
kind of
picture.
ironic, right? Because, I mean, Besson is essentially, that soundbite we played earlier, he's essentially blaming Biden for the deficit.
Of course.
Inherited.
And
right?
not wrongly, right? The deficit ballooned massively, right? So, you had the COVID boom, but then you had the stimulus bill, the clean energy infrastructure sponsorship from the government. That did lead to a big ballooning of the deficit. So I would argue that that was probably actually unnecessary at the time, and that does place the economy in a weaker position. That doesn't mean you should make it even weaker, of course, but that's where we are today.
I mentioned this at the top of the show. Bitcoin is getting so much bid right now. It's like up 3.6% in the last 24 hours.
5,000 now, right?
No, now flirting with the 107,000 level. So this is really the story for Bitcoiners out there, de-dollarization and the U.S. dollar looking very inflationary asset and so on. So just to go back to, of course, Steve, the massive rally that we saw since April 7th lows, how do you, because the conversation that we had around then was you need to hold on to cash, buy gold, stay away from U.S. assets. And now the narrative is, no, U.S. exceptionalism is not going to die that easy. And it's true that fiscal concerns never really pulled back U.S. equities, to be honest, right? So this is not going to really matter going forward for U.S. equities?
Unless we get to 480 or even 5 on the 10?
Yeah, so then obviously that's a different conversation, right? You start getting towards, we get towards to 5%. First of all, that's not what we were telling clients in April 7th, right? We were saying buy the dip. Right, okay. So that in hindsight obviously is a great thing, but that was obviously a good call at the time. We felt that we were at peak trade pessimism and deals would be done, and that the Fed would blink, the US would blink in terms of Trump. We probably got the factor that would drive that blinking probably slightly wrong in terms of we thought it was that 15 to 20% down on the stock market would be the challenge for the administration, and although that lines up, it was the 10-year Treasury yield coming back to that point that triggered that, right? So, they'll be concerned about that. They'll be monitoring it. But as I say, I think that strengthens Bessant's hand. If we do see the 10-year yield drift up, and we've done 2 basis points, it's nothing. Okay. If we did drift up towards those sort of levels, we think that would be a great buying opportunity for bond investors. We actually think current levels are attractive. But if we did get up to those levels, again, it just strengthens Bessant's hand, and it makes sure that they come up with something that's rational.
So bullish on equities, U.S. equities. I mean, is it just momentum, or are you looking even further ahead, not just to yet another or fresh trade deals yet to be announced, more to tax cuts, deregulation? Are you thinking that far ahead? Or?
Yeah, so I mean that's the next wave. So I don't think it's really trade is not passé, right? We still need to see what comes out, and there's still risks around that. But I think the market's a bit bored with trade, to be honest. Now, obviously, the challenge here, or the risk here, is, we get earnings forward guidance, right? So earnings announcements is one thing. They've outperformed, of course, in Q1. They usually outperform when you get to them. But I think the forward guidance is important. We've got a couple of retailers, coming out with earnings this week. And that's going to be important. That could cause some sort of consolidation if they start saying, well, the administration, I mean, they won't say it like this, but the administration doesn't want us to pass on the tariff increase to consumers. So we have to be really careful in that space. So we need to not be passing the full thing, which basically hits margins, right? So that's the sort of risk of a consolidation, but that's a transitory thing.
I mean, the big question is how many more retailers are we going to see do a Walmart, right? Pass on costs, right? And so far they've held fire, but they have no choice now. And B, pull their guidance, right? And, you know, in terms of their margins, et cetera, you know, they need to be careful with their language, obviously, right? But, you know, you saw President Trump posted on social, right? It's told Walmart, look, eat the margin, literally.
Yeah, so, and clearly they're probably not going to eat the whole thing. Eat the tariffs, right? So they will pass, I would imagine, some of that through. I think they'll be careful how they do that, which then will at least have a temporary impact on margins. But absolutely, and that's the key question everybody's asking. On the forward guidance, will they pull forward guidance? I don't think the uncertainty is that severe for them to pull guidance. I think that probably what will happen is that they'll disclaim that with the risks quite strongly.